In keeping to a resolve to have in place the Nigeria's national budget to run from January 1st to 31st December cycle, President Muhammadu Buhari signed the 2021 Finance Bill into law on December 31st, 2021. Now, our viewers and online participants may recall that ICAN on Air did a major review precisely on December 14, 2021, that's last year, on major changes that bill carried. And there we were guesting Mr. Taiwo Oyedele. Oh, well, on popular demand, we have brought him, I'm talking about Taiwo Oyedele, back today on this program to throw deeper insights into this Finance Act 2021, highlighting the key changes and the real expectations for 2022. Taiwo Oyedele Esquire is the Fiscal Policy Partner and African Tax Leader at PricewaterhouseCoopers. He's an author, keynote speaker, policy analyst, and a commentator on finance, business, and economics matters. Should I repeat that you demanded for him to come back? And ICAN on Air is pleased to deliver him to you today, wholesomely, and take this all-important subject. We are going to unveil our important guests, Taiwo Oyedele, in a question and answer segment shortly on this program. On this program in this new year 2022, I will be having a few adverts. ICAN intro, bit of tidbits. I'd like to ask you to please stay connected. We shall be back with you very shortly. Please join me in welcoming Mr. Taiwo Oyedele back to ICAN on Air. And Taiwo, dear, say it I that maybe only ICAN can get you so early in 2022 to come and give us additional insights where you left off last year. We promised our audience, and thanks for joining us today.
Thank you very much for having me, and good evening to all our audience. I think that we will have people from other parts of the world. It may just be morning, it may be afternoon, but good day wherever you are.
Right, precisely. And I'm going to be asking you to give us a broad insights to this subject. And I think an appropriate place to start is to look back to 2021 fiscal year, which turned out to be quite an eventful one. With many twists and turns. So what are the highlights for you, perhaps limiting it to three, your top three events for last year?
Yes, thank you very much. I think clearly I'll say my number one will be the VAT controversy. I think it shook the whole tax system in Nigeria. I'm not sure we've recovered from it actually. So the VAT controversy will be clearly number one. I think my number two will probably be the Petroleum Industry Act, essentially because not only because it's significant, but because it's taken us over a decade to land at where we eventually landed. Still not a perfect law, but it's progress. So that would be my number two. I think my number three would be, yeah, I'm tempted to say the global tax reform, but I think I should keep it local. I'll say the practice direction by the Federal High Court, which was then followed up by the Tax Appeal Tribunal's rules, requiring that taxpayers should pay a deposit of 50% before they can be heard, which many of us think is not appropriate. It could deny people of justice, fair hearing on tax matters. So clearly, last year was a year of a lot of activities, but I think those would be my top three.
Ooh, very interested hearing that from you. And now that we have the acts, uh, Finance Act 2021 already signed, and it's a law. What will be the notable changes in the act compared to the bill as presented to the National Assembly for consideration?
Yeah, that's a great question. I think, we've just seen the new law, the version signed by the president. I think just yesterday, today is when we started seeing it in the public space. And I'm not even sure it's been gazetted, but we can take the version signed by the president to be the final version that will be gazetted. And we have seen some changes between the version of the bill that was sent to the National Assembly and the one that the president signed. And some of the notable changes include number one, education tax has now been increased from 2% to 2.5%. I have my reservations about that. In addition to that, we now have excise duty on carbonated, sweetened, non-alcoholic beverages. So if you're taking your favorite soft drink, you're going to be paying now excise duties. We need to tell ourselves that this law, based on the version signed by the president, takes effect from 1st of January 2022. So it's already in effect, except if otherwise authorized through an order of the president or the directive of the National Assembly. So it's 10 naira per 1 liter. So that would translate roughly to almost 5% increase in retail price for those products. For those who want to do the math, I know accountants like to do a lot of maths.
Yeah.
Then the other thing we have is, these engineering and science agency, NASENI, there's a provision in the law. It was a very old law, actually, in the 70s, that says certain companies should pay 0.25% of their, I think it was turnover at the time. So in the bill that went to the National Assembly, that provision has been taken out so that companies would not have to pay anything at all. It was only the federation account to fund their activities. But in the final version that has been signed now, it came back in a different form and is now applicable to companies in certain sectors like telecommunication, oil and gas, aviation, and a few others. And it will be 0.25% of profit before tax. If their turnover exceed 100 million, then they become liable for those sectors, including banking. We also see the capital gain tax on shares. The threshold before was 500 million, and the rate of CGT was 5% in the original bill. In the final version, it is now 100 million threshold in any 12 months, unless you reinvest, and then the tax rate is now 10%. So I say those are the big changes that I want to highlight.
Oh, so beautiful. Thanks for that. You know that technically the Finance Act is designed to support the implementation of the national budget, which also was signed into law on 31st of December. And of course, to the hearing of the whole world, Mr. President made some reservations. Now, in your view, what are the major issues? Any impact on the implementation of the budget and the Finance Act? These reservations by Mr. President.
Mm. Yeah, when Mr. President was, reeling out those reservations, I didn't know whether to be happy or sad because I can tell you that these things have always happened, which is disappointing. But it was the first time the president highlighted them. Maybe this would be a turning point for us. So, if you think about what the president highlighted, some of them you would understand, some of them cannot be explained. So the National Assembly, for example, increased the revenue by about 400 billion. So they think that the MDAs can bring in more money. So maybe that you say, well, maybe we can live with it. But you need to justify it. What is it that you are seeing that the executive cannot see? And make sure that you're not trying to get agencies that should be rendering services to the people to start chasing revenue because that will become counterproductive to the economy. And then you have the ones that are most disappointing for me is you reduce the funding for major projects like maybe Lagos Ibadan Expressway. You reduce the budget. They already have a quotation from the contractor. You reduce it. How are they going to complete the project? And then they introduce over 6,000 new projects. And many of these projects were projects not within the purview of the federal government. They were projects for local government to execute because they call them empowerment projects which they want to show their constituency people that they are doing work. Meanwhile, the primary role of the lawmakers is not to be doing projects. I think these were, some of the areas where we felt it was disappointing. This has always been the case. If you recall, the minister for, power, so then it was Fashola combining three portfolio, had complained about this, previously about those adjustments. I think that the National Assembly should focus on reviewing what has been submitted to them and making sure that those things are sound and based on very reliable assumptions rather than introducing their own projects. They also increased their own budget significantly, I think by about 35 billion. Now, do I see any impacts on the implementation of the budget and the Finance Act? I'll say on the budget, yes, some of the, the president even said it, some of the project will be unimplementable. We're hoping that the president will go back with an amendment and therefore they can correct those issues. For the Finance Act, there's no direct impact in terms of the implementation. Government will still go ahead where they have new taxes, they will implement it. Where they have different reforms, they will go ahead because the Finance Act is essentially trying to support the implementation of the budget.
Very interesting. And so, the constitutional to and fro on who should prepare the budget, who should be reviewing the budget, and who should be implementing the budget now goes on. Well, Mr. Oyedele, as we all know, the government is in dire need of revenue while the economy is still in recovery mode and needs some stimulus. Now, what are the key provisions in this Finance Act seeking to introduce new taxes or higher tax rates on hand? And are there provisions to reduce taxes or grants incentives?
Yeah, excellent. So, many of us, including myself, think that there are just too many provisions in this Finance Act seeking to impose either new taxes or higher rates at a point when the economy is in recovery mode. If you reflect back to 2020, the economy declined in Q2 and Q3 by a combined percentage of about 9.5%. And last year, that's 2021, we're now in last year. So 2021, Q2 and Q3 recovered by about 9.1%, which means we have not even fully recovered to pre-pandemic levels in terms of GDP. We're still in recovery mode. That's not the mode when you start imposing taxes. That is the stage around the world when you continue to stimulate because you need growth, because you need development, because you need employment. While we understand that government needs revenue, this has to be done carefully. Otherwise, you have unintended consequences of pushing the economy back into a recession. So some of the, like I mentioned before, some of the provisions seeking to impose new taxes includes the excise on carbonated non-alcoholic beverages. We have the increase in tertiary education tax rate from 2 to 2.5%. We have NASENI, that's the Engineering and Science Agency, because even though that law was a law of the 70s, it was never implemented. So technically, it's a new law because now people will have to start paying. And we also have the one on police tax, which was enacted a couple of years ago, but it was not implemented because there was no provision in the law for who should enforce it. Now they made it clear that the FRS should be the agency to assess, collect, and enforce collection. So that technically is also a new tax. And we also have the one on CGT about the shares, whether it's private company or in the capital market. We also have a provision that says educational institutions. Before, what we had is if you were into educational activities of a public character, you didn't have to pay CIT. Now they've taken away that exemption, which means educational institution, whether you're of public character or not, is now liable to pay CIT. So that's also a big one. And then maybe a few where you could say that we have some sort of relief and incentive for people. I think the first one for me will be the 0.25% minimum tax reduced from 0.5 to 0.25%. What the Finance Act 21 has done is to expand the period from 2019, 1st of January to 31st of December 2021. That's 3 years. And it says the taxpayer has a choice to select any 2 years that they want. So because you are selecting any 2 years, a rational taxpayer will select any 2 years where the savings is highest. So that in itself is a sort of incentive to the people. And then we have unit trusts. When they earn interest now, the withholding tax on the interest will be their final tax. It wasn't the case before, or put differently, it wasn't clear like that in the law. So these are some of the provisions where you could say, of course, you see that we have more imposing taxes than the ones granting relief and incentives.
Thank you for those points. Now, if we now look at the National Development Plan between 2021 to 2025, we see that the government is projecting about 350 trillion within that gamut. Now, in what ways do you think the Finance Act 2021 aligns with the National Development Plan, if at all?
Yeah, good question. I think it's always very important for us to put a lot of what we do, including fiscal policies, tax laws, budget, within the context of an economic development plan for the country. Otherwise, you may find that you go forward one step, you go back 2 steps, and you're never moving forward effectively. So that's why I really like the question, actually. So if you look at the National Development Plan, it says from 2021 to 2025, and then it came out at the end of 2021. So we've lost 2021. Technically, that plan is now for 2022 to 2025. That's only 4 years. And it wants to, the investment plan there is humongous, almost 350 trillion, like you said, I think about 348 something to be precise, trillion naira. And it's expecting that the private sector will contribute close to 300 trillion out of that amount. Federal government will contribute their own, I think about 29 trillion, and then states will contribute around 20 trillion. And if you divide all of those figures by 4, you see it's almost impossible. Even though I like that we are ambitious, but we also have to be realistic. The state, for example, their IGR is around 1.3, 1.5 trillion. Their sharing from FAC is around 2.5 trillion. On a very good year, they share and they generate altogether about 4 trillion naira. How are they going to be able to fund? If you divide their 20 trillion by 4 years, that's 5 trillion. Where would they find 5 trillion to invest in this development? But I think that in terms of the biggest conversation is about the private sector. The private sector is bringing the bulk of the investment. But government, in my view, is not very consistent in the way they have handled the Finance Act and the budget vis-a-vis the National Development Plan. So for you to generate those kind of investment from the private sector, you must have a thriving capital market, right? You must have ability to raise bonds. The exemption on bonds, especially corporate bonds, expired on the 2nd of January. It was not renewed. Then you now have, taxes being imposed on capital gains in the capital markets, right? In addition to that, SEC also introduced their own new levies. So if you put all of that together, it's almost like we're saying we are discouraging people from raising capital, while at the same time we are hoping that we raise more capital than we have ever raised in our history. And government wants to lift out about 35 million people from poverty, generate over 20 million in full employment, but then you're imposing taxes on manufacturers. So some of the analysis and the provisions align with the NDP, but I've only just highlighted the ones I think are not really very aligned, and I would like for government to have a second look at this so that we are all coordinated and facing one direction in terms of our national development.
Thank you very much. I dare say that for those of us who understand numbers, my Institute of Chartered Accountants of Nigeria, we're just waiting in the wings. We can get the communication to have a kiss in terms of the kind of reality we are talking about. Now, how about the national tax policy? Remember, the national tax policy was approved in 2017 and it's still being implemented, or has it been jettisoned?
Yeah, okay, so that's a great one. So I think the national tax policy will probably be like the umbrella policy for anything to do with taxation in Nigeria, such that even the finance bill or the finance act, as well as government policy measures, as well as even tax laws, should derive from that national tax policy. To a very large extent, this government has done well in trying to implement the national tax policy, particularly the fact that they established an implementation committee to keep an eye on those provisions in the national tax policy, which also part of it is what led to the annual finance act that we're seeing now, third year in a row. We have also seen some reforms, especially around using technology, digital economy. We've seen some increases in indirect tax rate like VAT, right? To that extent, they are still implementing the national tax policy. But then the other aspect is, what is it that they're not doing? I'll say the biggest one is that national tax policy says as you increase the indirect tax rate, you should progressively reduce the direct tax rate. We have not reduced companies' income tax rate. By the way, Nigeria's companies' income tax rate is one of the highest in the world, especially when you look at the effective rate. 30% CIT, 2% TET, now 2.5%, right? Withholding tax on dividend. By the time you put it all together, it's close to about 40% tax that you pay on corporate income and profits. We also have issues to do with multiplicity of taxes and multiplicity of agencies collecting revenue. So we have seen over the past 1-2 years, government introducing new taxes. National Assembly passed a law on tertiary healthcare fund. They want to introduce another levy. We just spoke about police. There's NASENI. We seem to be doing the opposite of what the policy says. And we also have so many agencies, from RAMFAC to even EFCC doing tax audit to NIPOS wanting to collect taxes. But the good thing is that this Finance Act tries to address that part of multiplicity of agencies to say FRS should now be the sole agency of government collecting taxes. So I think overall, the NTP national tax policy hasn't been jettisoned, but is being slowly implemented. We'd like to see faster progress, including things like establishing the Office of Tax Simplification.
Excellent. And thanking our online participants. Some questions are coming in. I'll just take a few of them. Martin Sugu is talking about the Nigerian Police Fund that is payable by every company doing business in Nigeria. I was wondering if this is not undefined. Which company actually is qualified to pay by turnover or by PBT?
Yeah, for the police tax, it's every company, so it's different from the Naseni one. Is the Naseni one that has a threshold of
Mm,
turnover, and then it
mm,
asks you to pay based on PBT, and then it's limited to certain sectors, right?
yeah,
For the
yeah.
police tax, it's not. There's no threshold. You're a Nigerian company, you just pay. Maybe the
Mm,
good thing about it is it's a lower percentage in terms of what you
okay,
have to pay than the Naseni.
okay. Thank you very much. And Chidi Ebere Ironunu is looking for what's your reservations, if any may be, on the increase in education tax. Any reservations?
Yeah, I like that question actually. So thanks a lot, Shidebere, for that question. So Nigeria has, in my view, a very wrong approach to dealing with problems. We think that problems require that we throw money at them. In 1993, at the time when this education tax was introduced, Nigerian universities rank in top 1,000 in the world. And we said, let's improve education. Fast forward to 2022, we don't even show up in those top 1,000 anymore. Our education has degenerated. Think about something like information technology. We introduced NITDA. We said companies should pay tax, and then they've been paying taxes. I have not seen any remarkable thing we've done with technology. Think about ITF, vocational training. We've done that for so many years. What have you seen? Right?
Mm,
Now we're saying
mm,
police. If we keep throwing money at our problems, and we think the reason why education is not developed in Nigeria is because we're only contributing 2%. Instead of asking the question about that 2%, what are we even doing with it? What
mm,
else can we do? We just say maybe if we make it 2.5%, there's this analogy I like to always share, which is that if you are pouring water into a basket and the water is not being retained, the solution is not to increase the intensity with which you pour the water. The solution is to fix the holes in the basket and then it can retain the water. So that's my
mm.
reservation, my friend. Simple answer to your question.
Well, thank you very much for that. And Mr. Tunde Belo is asking if we can identify and sort the issues concerning educational institutions now paying taxes, like institutions not registered as LTD. What are their positions? And it's looking specifically at those outfits that
Mm.
run training centers or business schools.
Yes. So generally, any company that is not interested in making profit and sharing it to their shareholders or guarantors is not liable to tax to the extent that they are not doing business. So that's
Mm,
applicable generally.
okay.
ICAN, for example, ICAN, it's not really into only education, even though it's education majorly. But ICANN is not sharing profit to members or to council members. The same
Mm,
thing, you have an NGO. The
mm,
NGO does not have to be into education and they will not pay tax. So that rule
mm,
generally still applies, including
okay.
if you're into education and it's for public purpose and you're not
Mm,
sharing profit, you will
mm,
not pay tax. But the
mm,
amendment that has been made now is that before, even if you were a limited company, but you were of a public character, which was defined to include that you don't share profit as well, you didn't pay tax. So to be honest,
mm,
I'm not even sure that this amendment changes anything, but it sends
mm,
very, very negative signal to say that we're no
mm.
longer supporting education. Given the level where we are as a country, I think we should be supporting education, not discouraging it, in my own view.
Spot on, spot on. Now, Mr. Oyedele, not a few analysts have lamented the lack of policy coordination by the government at all levels.
Mm.
Now, do you see any progress towards addressing this problem in 2022 going forward?
Mhm. Yeah, so I wish I can just say yes, but I'm not sure that I'm confident to say yes. We have challenges with policy coordination, and I think it's both vertical and horizontal lack of coordination. So if you think about it horizontally, you say even within the federal government, even within the executive, one agency versus the other, fiscal authority versus monetary authority, National Assembly passing law versus executive in terms of policies, and all manners of activities within the federal government sometimes are not properly coordinated. And you also have, the vertical lack of coordination, which is you have the federal government, you have the states, you have the local government, and sometimes they are pulling in different directions. And Nigerians and businesses don't care whether it's federal. If the road to your factory is bad, you really can't be bothered whether it's a federal road or it's a state road. What you know is the road is bad, and therefore the cost of transporting your goods is high, and you spoil actually many of them will get damaged in the process. There has been some attempts to ensure coordination, including in the National Development Plan. There's actually a provision there for implementation and coordination, which is very good. But then we still see some activities and some, policies that are not speaking in the same direction. For example, we're saying let's reduce multiplicity of taxes, and the executive developed a policy and it was approved by FEC, and the National Assembly is there introducing new taxes. For every new agency they created in the past couple of years, they created a levy for that agency, not only creating multiple taxes, but also creating multiple agencies. And we've also spoken about the issue around the capital market. On one hand, you want to raise more capital. On the other hand, you are not supporting the capital market. So I would like for us to have more coordination vertically and horizontally, and also that even more importantly, our policy is driven by data and evidence. If I tell you about these new tax on non-alcoholic beverages, they say
carbonated drinks,
yes, they said is to discourage you from consuming sugar. Do you know that according to the World Health Organization, the threshold for lack of sugar is also a problem? So it's not like you must eliminate it 100%. The World Health Organization prescribes something around 25-gram consumption per day, which is about 9.1 kilogram in a year. And Nigeria's consumption is at 8 kilograms. So Nigeria is not even at the top of this prescription. Whereas countries like the US are close to about 70 kilograms, almost 10 times what we consume in Nigeria. So we cannot just copy what they are doing in the US and the UK and come and replicate it in Nigeria. Also remember that those other countries have free healthcare. So when your habit and your consumption pattern leads you to health problem, the burden is on the treasury, it's on the states. So the states say maybe you should contribute more because you are putting us in more burdens. Now that makes sense, right? But in Nigeria, even when you pay this tax and you now have a health problem, it is on you and your family and your friend. Government will not take care of you because healthcare is not free. Technically, it will amount to double tax. So we need to use more evidence and also ensure there's coordination vertically and horizontally.
I hear you clear. It can be cut and paste. It's got to be fit for purpose. And a question flashed earlier. Mr. Olalere Babalola was talking about the fact that tax appears a cheap way by government to raise revenue. And what other sources will you suggest that that will do less harm to businesses? I think Mr. Olalere Babalola now says that over taxation perhaps do a lot of harm to businesses. Are there any other ways that you may suggest that revenue can be upended?
Yeah, of course. There are so many ways. Of course, tax remains the most viable way to fund government revenue, and is the most sustainable way. But Nigeria, given where we are, we have many other ways. The other one that is very big, almost as big as tax itself, is privatization. So today, government is running NNPC. For 44 years, NNPC declared profit only once. That profit is even an accounting profit. Whereas you find countries where the equivalent of NNPC is releasing tens of billions of dollars in dividends and profits every year. Yes. Look at the refineries we have. We spent over 100 billion and we did not even refine 1 barrel of crude oil. Now we've borrowed $1.5 billion to turn them around. Nitel, Nitel was given a license to do GSM for free. They cannot even compete with the people that paid hundreds of millions of dollars. Where is Nitel today?
Hmm.
If you privatize government assets, NNPC, refineries, Ajaputa Steel, and just allow private sector to, America produces more oil than any other country in the world, more than 10 million barrels per day. They don't have a national oil company. They don't care. They make money from the companies running the oil.
Hmm.
So if we do that, Nigeria will save billions and billions of dollars on an annual basis on what we call dead assets. We have a report
Hmm.
at PwC, we call them dead assets, worth more than $900 billion.
Hmm.
Now, if you take that aside, the other aspect where government can make money is what I'll call, optimization. We say we have, a revenue problem, but maybe we also have a spending problem. So if you prioritize what you spend money on and you gain efficiency, we have heard many reports, from
Hmm.
NDDC where somebody will collapse because they can't explain where the money has gone to, or
Hmm.
where we have fixed road and it turns out that we spend 10 times the money to fix the road and the standard is even, is questionable. If you address those issues of expenditure efficiency, you find that maybe the little money we have can do a lot more. So these are some of the key areas where we can raise revenue without really putting too much burden on the people every single time. And then use data and intelligence to ensure that the people with the right resources and money and income are paying their fair share. Today, the burden is disproportionate
Hmm.
on the poorest people in society. That's why personal income in Nigeria is mostly from PAYE. Those guys are
Hmm.
just barely surviving, but
Hmm.
that's
Hmm.
definitely what it is.
You can say that again. Huh? Let's look at the elephant in the room.
Mm.
Fuel subsidy. Already, I see the incubus is gathering. The labor unions are making statements here and there. Now,
Mm.
how do you think this will play out in 2022 vis-a-vis the need to implement the Petroleum Industry Act, which does not envisage a subsidy regime?
Yeah, very good question. Now, if I say that anybody has this answer, I'll be deceiving myself. I don't have the answer, to be honest, but I do know what we're not supposed to do. We should not, in my view, remove the subsidy and replace it with another, leakage. Or we are going to give 5,000 to 40 million households. Even when you do the calculation, it's even more than the subsidy we are trying to save. I think
2.4 trillion.
Nigeria should just, be very intentional and say we have to remove this subsidy. So the only conversation we should be having is how do you reduce the impact on the vulnerable household? That's the only conversation. Even labor should go to government and say it should not be don't remove subsidy. It should be tell us what you will do to protect the vulnerable people. And my idea of subsidy is that we should make it self-sustaining such that the subsidy is only taken at the point of buying petrol. At the moment, subsidy is recorded at the point when you bring in the product.
Mm,
So you can bring in products and go and throw it to the lagoon or you take them to Cameroon and you still get a subsidy. Imagine we change that such that when you show up at the petrol station, there's a way we've identified whether you're eligible to the subsidy. If you're eligible, you give a card and you pay the regulated amount. If you are not eligible, someone like me should not be eligible. I'll go there and I'll pay the full market price. And then the tax on the fuel that some of us who are not eligible are paying will be used to subsidize people who are eligible, including like the transporters. So if you're
mm,
riding Danfo, you are an eligible person, but you can only use it for the Danfo that will be registered, and even the threshold of your consumption is determined. So you cannot be buying and reselling it. The system will find you out. I
mm,
think Nigeria can find a more scientific and logical and practical way of dealing with this fuel subsidy. It's also a little bit difficult for me to understand why there's no provision in this budget for even the palliative. And therefore, it calls for a lot of question as to our intention, whether we really want to remove it. And I do think the right thing for us to do is to indeed remove it and be able to implement the PIA. At the end of it all, I think that Nigerians will be better off. if we manage
Yeah.
this very well.
More so that competition can come in. It happened in
Yes.
telecoms, and then we'll be
Yes,
able
we
to,
should be
you
exporting refined product. Actually, we should be exporting refined products and make foreign exchange from it, not spending our very lean foreign exchange to be importing products that are then smuggled to neighboring countries. In fact,
know.
inflation might even come down if you
Mm,
remove
mm,
subsidy and you manage it well. Because what's going to happen is that the demand for FX to import petrol will reduce, and
mm,
therefore
mm,
naira would appreciate. If naira appreciates, then the imported inflation would reduce. And then you may find
mm.
that the impact on inflation is not even as bad as we envisage.
Thank you very much, Mr. Taiwo Oyedele. But I always believe that we focus so much on the federal government with very little attention on some national level of governance in this country.
Mm.
What's your assessment of the overall performance of states against budgets? And do you really think they should also consider an annual finance act to support their budgets?
Yeah, I think you're right. We should not be focusing only on federal government. We have three levels of government. The state government, in the last time I analyzed their budget combined, was around 9 trillion naira budget for all the 36 states. But then when I looked at the revenue, because one thing is to have a bogus budget, but can you implement it? Their revenue IGR plus FAT was somewhere around 4 trillion. So the size of the states in terms of public expenditure is around 4 to 5 trillion naira. Even if they borrow, like Lagos State recently raised about 100 billion naira bond. So we need to start focusing on the state in terms of what are they doing, how efficient is their budget implementation, how efficient is their spending, and even revenue optimization. I agree with you, we need to combine all of this together. Should states be issuing finance acts? That's an interesting one. I'll say because the states also have responsibility for certain laws. If you take something like land use charge, land use charge is the tax of local government and collected by state. There's a bit of property tax embedded in it, and so on and so forth. For those policies and laws affecting the state, they should be deliberate every year when they produce their own budget. They should also think about what are the fiscal policy measures that will help us implement this budget. And to that extent, I think it will be a good idea for them to start thinking about having an annual finance bill to accompany their own budget.
Beautiful point. Thank you. And for our online participants, if you are just joining in, the fielding, Mr. Taiwo Oyedele has been throwing the deep practical insights into the Finance Act 2021, the key changes and the expectations for 2022. Mr. Oyedele, I will not allow you to go without asking you this, that many Nigerians are concerned about this rising level of budget deficit and debt accumulation. And being a pre-election year, we had Mr. President say to Nigerians that, yeah, we're going to continue to take Chinese loans.
Hmm.
Being a pre-election year, do you think 2022 will be better, or do you think things will get worse?
Yeah, I hate to say this, but I think things will get worse before they start getting better. In fact, if you look at the NDP, it's already project that over the next 2 years, we're going to borrow additional 12 trillion naira. So our debt burden will rise from about 38 to around 50 trillion. So it's already there. And I think it would be unrealistic to think otherwise. I don't see the magic that will happen immediately. But I
Mm,
do think that we can make a bad situation not to get worse. And some of what we need to do is around, again, expenditure efficiency, revenue optimization, and a debt management strategy that is integrated, because things are being done in a disjointed manner and it's
mm,
not helping our situation. So
mm,
unfortunately, in a pre-election year, politicians forget about everything. They forget about governance. They are preoccupied with how do they get re-elected, and it's sad because they put the life of 200 million people on hold just because of their vested interests. I think it's the duty of us, Nigerians, especially the middle class and professionals like our members, to not allow that to happen in the way that we engage and continue to have this public discourse, to be able to hold them to account and push them to action so that a
mm,
bad situation does not get worse.
Yeah, thank you very much for that point. And I like to say we are poised. We are ICAN. Yes, we can. I saw a question. Somebody was looking at the tax on carbonated drinks. I was
Mm.
saying for manufacturers who already pay CIT, will this not be additional burden when you now then impose this tax on carbonated drinks on them, and therefore will be a disincentive to their manufacturing activities, their ability to raise taxes and revenue? What are your thoughts?
Yeah, in principle, it's not the tax of the manufacturer. But if I stop there, I'll just be very academic. It's supposed to be the tax of the consumer, but the reality is the consumer don't have purchasing power. They've lost employment. Some of them, the value of naira they were earning before is almost half now. They're struggling
Mm,
to survive. So the manufacturers, if they pass the entire excise to them, they will lose their sales. They will lose their volumes. So
mm,
you are going to find that they will share the burden, and their
mm,
margins are already very skewed. Even transportation cost is higher now because of insecurity. To move any product from one location to another, you spend more money. If you
mm.
import them to clear the goods from the port to just going
Yeah.
to Accra, it's rocket science. So these are companies that are already struggling with margin, with profitability and capacity. Now we put
Mm,
more burden on them, which they're going to share with their customers that are also struggling. I just think that the timing is not right. I'm hoping that we
mm.
can, quickly retrace our step before we do any bigger damage to the economy.
Very hopefully, because time is not our friend. I'm going to
Mm,
be asking you. I know more questions are coming. Again, times time being the limiter.
mm,
I'll be asking you for your last words. But before then, let's look into the crystal ball as we round off this segment,
mm.
and ask you, what should professional accountants and other key stakeholders expect in 2022 in terms of the fiscal environment? And do you really think the VAT controversy will be resolved this year? Marry that with your last word, with your last words to us on this segment.
Yeah, excellent. I think let me start with our members, professionals, who are the key stakeholders we're addressing today. I know there will be other people on this call. I think it's important for professionals to pay attention to what is happening, and they have to always look beyond the surface. Many of us are too comfortable just reading the headline and then we move on. So you need to start thinking now. For example, when they say education tax is now 2.5%, you need to start asking yourself, would they apply to the year of assessment 2020, or would they apply to the basis period of 2020? In other words, when you are filing your next return, should you be paying the 2.5, or would it be
Mm,
subsequently? Look
mm,
at something like NASENI and the police levy. The Police Levy Act was enacted in 2019. NASENI was in the 70s. Now they said FRS reinforced. Should they go back or should they go forward?
mm,
What should be
mm,
your advice to your client as the professional, or to your company if you work in the industry? So
mm,
my advice is that as professionals, we need to go get down into business. We need to go into details. They say the devil is in the details. Do the analysis, raise the issue now, so that if you need to engage, you start engaging with the company, with tax authorities, to get clarity. For other stakeholders like businesses, small businesses, large companies, multinationals, I think it's for them again to understand and then to participate. It's not sufficient to just complain. People should provide data to encourage government to make different decisions if they don't like what government has done. The minimum tax that says you can now choose 2 years between 3 years. Professionals also have the duty to be able to advise their clients and their company that they work for about which one will give them the best results. I don't think the VAT controversy will be resolved this year. We are likely to get a judgment, maybe all the way to the Supreme Court, but it will not be the end of the problem, because I think it's a constitutional problem. And politicians, because of election, they won't have time for us. They're going to be
mm,
facing how they get reelected. So I think this problem might just be with us beyond 2022. So my
mm,
parting word is for everyone, no matter who you may be, professional accountants, business owner, multinationals, or even just friend of Nigeria. Please don't be part of the problem. Do be part of the solution.
Thank you very much, Mr. Taiwo Oyedele, for the insights you have given. And I'm very sure we'll be calling more on you to do more of these insights. We will go on a very short break. We are still around, we'll still be back. Please hang on, don't go away. Thank you for staying on. I'd like to especially thank our online participants for holding faith to ICAN on Air, which debut last year continues for every Tuesday and for every Thursdays at 6 o'clock West African time. We bring you fresh and fresher insights. I'd like to thank our members and friends of ICAN who have liked ICAN and who are following us on this program. So, one of my colleagues flashed on the screen from Ghana, the US, Canada, and the UK. I'd like to let you also know that it's a continuous basis that we have resolved to make sure we keep at. We are going to have this program again January 11, 2022, which is going to be Tuesday. Will be 6 p.m. and it will be on all our ICAN channels. Look out and see that we will give opportunities to advertise your products and services. Now, for January 11, 2022, we are going to be having as our guest Mrs. Chioma Ifeanyi Eze, BSc, MSc, MBA, ACT, IFCA. She's the founder of the Accounting Hub, an entrepreneur with a great passion and love for small businesses. She'll be looking at this topic, and I want to listen to it. Leveraging accounting knowledge and skills to make money. I'm sure you heard that right. Leveraging accounting knowledge and skills to make money in 2022 and beyond. Now, let me leave you with this quotation. Don't tell me what you value. Show me your budget, and I'll tell you what you value. End of quote. And that was attributable to Joe Biden, the president of the United States of America. And as I always posit, you be the change you would like to see. I remain Akifatunke, your anchor, ICAN on Air. See you next Tuesday by the special grace of God. Bye for now.